I want to tell you how to implement my CVIX indicator, Capstone VIX indicator for day traders. It's a better volatility indicator than it would be for than the regular VIX is. So if I want to, first of all, what is a CVIX? And basically, I've gone over this in several videos. The CVIX, Capstone VIX, is it counts the number of zigzags in a day based on 1/3 of 1% moves, and it divides by the VIX. Here is the latest information that I have on the history of this Capstone VIX indicator going back to 2007. It was slowest on coming off of high levels during the housing crisis. You see the VIX popped and the CVIX, and so really good cyclical indicator. I really like this indicator. And so what should I do? Should I reprogram all my strategies to look at this data? That's really hard and time consuming to do. What is a fast way to do it? Is to put the CVIX data in the spreadsheet. So I created a new tab. I created a couple of new tabs to do this. I created the normalized VIX data, and if you're a subscriber, you're going to get this indicator. But I'm not going to reprogram all my strategies to look at this. It's extremely time consuming, take a very long time, and this is a faster way to do that. We check the CVIX at the end of each day. If it's greater than 1, you could take a vacation on the next day. You could just turn off trading that day. Look at the VIX indicator. You should be able to get that reading at 3:15. Start to go flat by 4 o'clock Central, and then don't trade if the CVIX is greater than 1. And you can test this in the portfolio calculator now. Don't trade if CVIX is greater than CVIX threshold. 1, that means this filter is on. 0, the filter is off. The CVIX threshold is the value in which you stop trading. So if the filter is on, we stop trading if the CVIX is greater than 1. And so if we go through here and take a look at this, what if we turn it off? Right now, I've looked at the stock index portfolio 40. It's currently in a 79.37 drawdown out of 58K. And if we turn this if we make this 0, which means turns this filter off, we will get, I'm going to update it here in a second. Click on save to get the update. And you see 26K out of 92K. And we've talked about how we're only looking at going back 10 years in this setup anyway. If you go back 10 years, the worst case drawdown is about 50K. And so it's about 50K going back 10 years. And you can see where it's at. We've popped here recently. And you see that, let's turn that filter back on, and you'll see the difference. So let's turn the CVIX filter back on. And this mainly is for stock indexes, so for portfolios that include other markets, it's not quite as applicable. So let's scroll down here. This is up 1720. With the CVIX filter on, it's up 1720 this month. And here's what the drawdown curve looks like. It's above the worst case drawdown is 50K all the way back, and except for this point going back about 13 years, over 13 years ago. So much better on this side of the drawdown curve. It's about the same on this side. It's a little bit better on the historical drawdown curve. Let's look at the net profit. This one goes up to 31.87 because this number goes down from 92 to 58, even if we go all the way back to the history of this, back to 2008. So you can look at others. You can expand this, and you can look at other portfolios. For example, let's look at the stock index portfolio 27. Stock index portfolio just tapped a worst case drawdown, but with the CVIX indicator on, it's not at a worst case drawdown. So let's look at it without this filter on. You set this to 0, the CVIX filter to 0, and it calculates it normally. And you scroll down here to take a look at this, and it's a good portfolio setup. It tapped this worst case drawdown, and it's bounced back a little bit, and we expect that during periods of higher volatility. you get 48.98. What happens if you set this to 1 and update this? Instead of a 22 out of 25K drawdown, you get, this is a little slow to update, it's a lot of data, sometimes you have to push the save button for it to update. 3,600 out of 2272. This goes down just a little bit, but you reduce your risk a little bit as well. So you're looking at a drawdown curve that looks like this, which I like a lot better. The worst case drawdown doesn't affect it a lot, but you trade less days, or days where you are not going to trade, if the previous day's CVIX was greater than 1. So at the end of each day, you check the CVIX. If it's greater than 1, then you don't trade for that day. And that is one quick way to add a filter for all strategies all at once without having to change your easy language file to multiple trading systems all at once. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.